Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, we're on tenterhooks for this afternoon's RBNZ Monetary Policy decisions. First up today, however, is a dairy auction. It was another tame affair with prices rising just 0.4%, although that does make it the 11th rise in a row in an overall gain over that time of 28%. But over the past year, the gain is only a measly 4%. US data showed a good rise in job openings in April, slightly more than expected, and consumer credit outstanding expanded to levels 4.9% higher than in March 2018. But consumer credit flows were up only 2.5% in March from the same month a year ago. US consumers are having real issues paying back the obligations they're taking on. But this is detail. Markets are focused on the deteriorating trade situation much more. The key Chinese trade negotiator says he will go to Washington for more trade talks on Friday and Saturday, setting up a last-ditch effort to avoid the sharp increase in tariffs on Chinese goods threatened on Twitter recently by President Trump. The US is accusing China of reneging, but more likely it's just the US not getting the outcome it wants through negotiation. Equity markets aren't expecting any success, however, with Wall Street slumping a grim 2.4% in trading so far today. In Europe, large falls were also suffered in overnight trade. EU cuts to growth forecasts didn't help there either. In Tokyo yesterday, they were down 1.5%, but Hong Kong and Shanghai recorded a 0.7% bounce, following even sharper falls at the start of the week. Slumping international trade growth is seen directly in international air freight data out for March overnight. This data was essentially unchanged from the same month a year ago, but is actually in reverse for the Asia-Pacific region. That trade is down 3.8% in a year. In Australia yesterday, their central bank did not cut interest rates as many had expected. Essentially, they set a jobs test. If their unemployment rate keeps going down, there will be no change if inflation stays low as expected. But that could change if the strong current job situation reverses. It is telling that their eye is off inflation for now. Analysts in New Zealand should also take note. Stay tuned for today's RBNZ rate review at 2 o'clock this afternoon. We will have a live stream of the press conference by Governor Orr. Remember, this decision is the first under their new committee structure where some of the voting members are outsiders. Markets are now expecting a 25 basis point cut, but recall, markets expected that cut in Australia yesterday too, something that didn't happen. US Treasury 10-year yield is now at 2.45%, and that's 5 basis points lower in trading so far today. Gold is up $4 to $1,285 an ounce. And US oil prices are down sharply today, down more than $1 to just over $61 a barrel, while the Brent benchmark is just on $69.50 a barrel. And the Kiwi dollar will start today softer at 65.9 US cents. On the cross rates we're lower too at 94.2 Aussie cents. And against the euro we're at 59 euro cents. That puts the TWI down to 70.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.